Hey guys, it's Jordan Trades back with another video, and today I'm going over my Asia model, my Asia trading model that I take during Asia session every single day. It's my bread and butter if I don't trade during New York, and I look for this. So without further ado, we're gonna go right into the trade breakdown. I'm gonna go over to TradingView for you guys to actually see this trade setup. So without further ado, let's go ahead and get to this trade. Okay, so like I tell you guys all the time that I'm looking for this trade between 7 to 9 o'clock, but I'm initially looking for my buy side liquidity and my sell side liquidity from 6 to 7 o'clock necessarily. So right here during that 4:59 and my 6 o'clock, I always draw out my new day opening gap, right? It was just a wick, so we went ahead and marked that as a wick. And then literally around 6:03 we had our initial buy side, and 6:43 we had our initial sell side liquidity, right? So we waited till 7 o'clock. There wasn't necessarily a trade, but I liked this sell side liquidity that was sitting right here. I thought, okay, we could potentially not touch our sell side, our main sell side, and treat that as a protected low, and use this sell side to catch to move to buy side liquidity necessarily. So I was kind of confident in this trade. Right here around this time, we weren't in a macro time, which another thing I use for confluence. But I thought I saw a good setup once we swept this sell side liquidity. I was looking for the inversion fair value gap that was created right here. We seen that it broke it, and then it actually came back in, and I wanted to trade that fair value gap that was created. So it was a pretty good setup. It wasn't that big of a loss either. So necessarily. So I had my low right there, and I'll originally look to take price to the new day opening gap or the buy side liquidity, right? Price ended up breaking through with this crazy candle that it did. So we ended up losing that trade, which is fine. Once I lose a trade, I mark it down and I journal it and figure out what went wrong. What I did notice, like I said, was we didn't use our initial sell side liquidity. That's why from now on out, it's important to only be using your buy side or your initial sell side, unless there's certain situations that come forth. And from now on out, I won't be using, my secondary sell side or my secondary buy side liquidity. So we ended up actually sweeping that sell side liquidity right after we hit our stop loss, and it ended up tanking. Not only did we hit our sell side liquidity, we actually ended up in a key level that I marked out like earlier on. I'm pretty sure from the other day. So, and I'm pretty sure that is a daily. I'm pretty sure that candle right there, or this big line right here, is my daily key level that I marked out from New York session. So that was just another confluence that, okay, we're using this as another key level to clean all of our sell side liquidity out. So once we did that, we hit around 9 o'clock. So usually I wouldn't trade past 9 o'clock, but I wanted to go ahead and try out the 9 o'clock macro time. So 8:50 to 9:10. I went ahead and wanted to trade within that to see if we had a good setup. So as you guys can see on my other chart here, it has a better here. So and I took this. I was looking at, once we had that sweep, I was looking at the 30-second when it comes to inversion fair value gaps. I like the 30-second just because I'm so used to it by now. So once we had that sweep within that key level, we kind of played within this range, right? And what I noticed was once we created this fair value gap, I wanted to see price actually inverse it. Once price came below this, we seen we had an open low high close. Not only that, we closed above the fair value gap, so we created an inversion fair value gap. Not only that, with that same gap, we created another fair value gap, basically. So we had an inversion fair value gap, and then we had a fair value gap. So I went ahead and bought right here at that. I went ahead and bought right there. Once it closed above it, it was a pretty good setup for me. So what is that? 907. Okay. So I just wanted, and I went ahead and marked that off right here as well for y'all. So I had a 2606 was the entry. pretty much right there, right? Stop loss right here at that low. And I was aiming towards the new day opening gap, right? So once this happened, this was my riskier entry. My original entry, what I always use is inversion fair value gap. So as you guys can see on the trading view account, we actually inversed this big fair value gap. Once he did, I wanted to see price dig in a little bit before we entered straight off the bat. So we entered here. Hold on. I'm gonna go ahead and mark this off too. Entered here. Stop loss below this low, or you could have had it below the push that actually broke the this fair value gap, creating an inversion fair value gap, and targeted the new day opening gap, right? So from our original trade, we held it and we continued to move our stop loss in profit. As you guys can see, price continued to have protected low here, protected low, protected low, and so forth. So that's indicating good bullish momentum. Not only that, every time that we did create a fair value gap, as you guys can see right here, hold on, let me get rid of this. As you guys can see right here, for your initial entry, if you were to take that inversion fair value gap entry, I went ahead and had our middle line selected, and we see how price necessarily we did wicked below that, but we never closed underneath that fair value gap. So that's good indication for me to stay inside of this trade and place my stop loss right below these lows. So continue to trade this. I want to still have my continue to trade this, and we actually ended up wicking right there at that new day opening gap. Ridiculous. So I gave it another minute before we closed. We closed literally right here. It was a good setup. Like I said, 100 ticks, 25 points, which is still a W trade for me. Like I said, this is my bread and butter. We took a loss initially. Once we did, we lowered our risk. We journaled it. We lowered our risk on this trade, taking a riskier trade, but we went in with 5 micros, which was not hurting me at all. And we look to take this high. So we made back what we lost on there and then some. So I hope that you guys did enjoy this little trade breakdown. Like I said, Asia session is my bread and butter. Looking for that sweep of liquidity and looking to take targets to the opposite set of liquidity or the new day opening gap. Like I tell you guys, what's so important about these new day opening gaps is you can use that as targets, right? We can see a lot of rejection once we hit those points, especially with it being just what 20 ticks away. You can use that as a take profit instead of using your initial buy side liquidity. If that's too far, you can use that new day opening gap as a target as well. So that's kind of what we look for. Literally to the T, it played out so good, but missed it by a tick. So I hope that you guys did enjoy this video, man. And if you have any questions about the Asia model that I trade, hit me up on my socials, man. I answer all questions. And I hope that y'all enjoyed this. And without further ado, I'll see you guys in the next video. Peace.